Welcome to the Planet MicroCap Showcase. I'd like to introduce our next presenter at our event. It is Justin Hales, CEO of Camplify. It's a publicly traded company. The symbol is CHL on the ASX. And with that, Justin, take it away.
Hi, Robert. Thank you very much for having us at the event virtually. Certainly look forward to next year actually being at the event in person. Today I'm going to take you through a little bit about Camplify, our revenue model, what we're doing, our performance in the last 6 months and last 9 months as well. I'll just pause here for a second on our disclaimer slide. While I'm doing that, we'll also go through our strategy and so what makes Camplify different from other marketplaces out there, generally speaking. So a little bit about myself. So I've been involved in listed companies for a little while now. I was at a previous listed called QMaster, which was a mining software company that was also listed on the Australian Securities Exchange. That company grew from the same base where I am at the moment, Newcastle, out to be a real global player in the mining software space and was eventually purchased off the ASX a few years ago. After that, I certainly myself was looking for what I was going to do next, and Camplify became the thing that really evolved into a global business as it is today through myself just trying to solve a problem, and that was connecting me up with someone who wanted to hire their RV. So through that process, we found that there was a real demand, and not just a demand in Australia, but in many countries around the globe in a very similar environment. And from there, we really grew the company out to what it is today through the partnerships and investment that we had from various different corporates and also through private investors. So Campfire really is the go-to platform that connects hirers of vehicles and owners of vehicles together. And we provide everything that those two parties need to transact. So we provide contracts, we provide manage all the payments, we provide support, and everything that those two parties need, including insurance, everything to transact online. Our platform provides that and connects those two parties together in a safe and secure way. We began the business in 2015, and really we scaled the business dramatically in the last few years, along the way having different rounds of investment, including that from some strategic investors such as the NRMA in Australia, National Roads and Motoring Association, very similar to the AA in America. We also took some funds from Apollo Tourism and Leisure. They're also a listed entity in the code ATL, which is one of the big providers of rental fleet, both in Australia and in North America as well. So we've scaled the business out now to 4 countries, Australia being our primary base, now in the UK, Spain, and also New Zealand. So a little bit of an overview of us. We are a traditional marketplace, so we provide that connection and those processes to enable customers to transact. As part of that, we take a clip of the ticket along the way. So as customers transact with us, we take around about an average of 20% of the transaction through the marketplace. But we've also grown the business into providing some other revenue lines. And I'll talk a little bit more about that in a moment, but it makes us a very unique marketplace because unlike others, we actually have a take rate that's increasing over time and continuing to increase quarter on quarter. So those products have been developed with our customers in mind, and in many cases they've actually been developed with our customers' request as to what they would like to see from us and what they need from us. And so we've built these products to be able to service that market, and as such they've been really well adopted, and we've seen that revenue and that take rate increase dramatically over time. So we've grown our community quite significantly, and I've got some updated figures as well to share with you as to where we're at the moment. So we've got this continually growing base of customers from what we call hirers, and also this dramatic increase in fleet as well. So with more and more people listing their vehicles with us. And I guess, from day one, we've been a company that hasn't actually been constrained by people wanting to hire, but it's actually vehicles on our platform that is our key constraint. So we have way more customers that want to hire than vehicles on our platform. So we're always focused primarily on how do we get more vehicles, because we know there's significant demand there from our customers to be able to rent these vehicles, particularly in peak times. And so we're seeing, this strong demand ever since day one, but continuing at the moment from customers who want to be a part of this type of lifestyle experience. So we're really on a mission to create the best platform and to be one of the biggest in the world in terms of this RV rental experience. And we really want to be able to provide a way that our customers who own RVs can leverage our platform to help them pay for that vehicle, but also make it accessible to everybody wherever they are in their local neighborhood, to be able to have an RV on demand for them to use whenever they want. We really see that our competition is people making a decision about whether they go camping in a tent or whether they use an RV when they want to go and have that experience. So for us, it's about how do we activate these neighborhoods in every market that we're in to be able to really make that a simple process for our customers and get them coming back again for their next experience when they want to go camping. So I think one of the unique things about our platform, and we've seen this in a similar way to companies like Airbnb, is that we have these customers who are building businesses through us. And that's been a trend since our early days, when we saw our first customers realize that they could actually make a really good income out of this. And then they've started to add more and more vehicles to the platform. So we've actually structured our products to support them and make it easier and build the platform and our product suite out for customers who want to build a little micro business through our platform. So, because of that, it means that we have these customers who are building more and more and more fleet through us, and we're servicing them more and more. We're providing all the things that they need to transact as a little fleet operator. And as they grow and they get more fleet and more bookings, we also grow in turn as well. And so, we're taking 20% of all of those transactions, as well as providing them services as they're getting more and more fleet on our platform. So it's a great network effect. And it's one of those marketplace effects that actually makes a lot of sense. And we start to see this real amplification through our platform as our customers grow and as we grow as well. So, our customers choose our type of platform because of the way that we operate our platform. And versus traditional operators, we certainly see that there's a lot of advantages to renting through Camplify. So with this distributed model, that means that our customers can get something wherever they want to, all around the world. They can see the exact availability, they can see exact pricing, they can see the exact vehicle that they're renting. So there's a lot of advantages to using a platform like ours versus a traditional renter. And also, once we get to this scale of vehicles, we have this great ability to service whatever different types of vehicles they want around in their local neighborhood to enable them to go on this type of holiday. So just getting into some figures. So these are our half year results. So you can see that up until December, we had transacted just over 22 million in terms of our GTV. Year to date, we're actually trading at just over 35 million. So, we've certainly seen that continual ramp up into the third quarter. And, from our revenue perspective, you can see we're at 6.8 million with 109% growth overall for a PCP comparison. Well, as of the end of quarter three, we traded at just over 10 million. So you can see like 40% of our revenue came in that third quarter. And we do see this seasonality that occurs in our business where the second half has this big boom and lift from even the first half of the year. From a bookings perspective, really increasing those bookings, but average booking value is probably one of the keys. And unlike other marketplaces that can have these small transactions, our transaction size is quite big. So sort of trending around that $1,200 mark. And certainly from our revenue perspective, we're taking an average of about $300, just over $300 per booking that comes through the platform as well. So I mentioned take rate earlier, so you can see that our take rate for the half year was 29.1%. Year to date, we're trading at 30.34%. So our take rate's increasing over time, and that's due to the product mix that we have and the way that we provide our customers with different types of revenue lines through the business, including premium membership, insurance products, our clip of the ticket on the commission, as well as various different products like GPS units and you name it that we're providing to our customers through the platform. Our RVs are actually at the moment just over 8,500, and our new customers are just over 52,000. So we've really got this great trajectory in the business, and we're excited to see where we can take that to in the next little while. So from a overall sort of gross transaction perspective, you can see that growth that we're having, average of 94% CAGR. Revenue and take rate, we're growing that as well, and certainly we're seeing that significant growth over the last couple of years of over 100% CAGR as well. Gross profit and margin, we've started to add in some new products into the mix that actually take our overall gross profit down a little bit, but it's because we're adding additional products to our customers that are already transacting through our platform. So our overall platform related gross margin has been fairly consistent. It was actually at 77%, so increasing for the half year. But when we start to add in these additional things like vehicle sales and you name it through the platform to these existing customers that we've already got and already transacting with, it does bring our overall gross margin percentage down a little bit. So just looking at some of the market overall, you can see where our growth is coming from. So growing in every single market with some significant growth figures, but particularly for us out of Europe, we're seeing some really strong growth in those markets. I think for Q3 that we've just done a market release for only a couple of weeks ago, we saw the UK in that period grow by over 900%. So we're seeing some significant numbers come out of these markets, and across the board we're just seeing significant growth in all the key metrics that we measure, which is great for us. We've always been a high growth company, but you'll actually see that we grow through some sustained ways in terms of spend, which is what you want to see from a growth company as well. So you can also see from this slide that we're not only seeing our overall growth, but what we're also seeing is a growth in the actual number of days that people are going away on rent. We're seeing an average booking value per day increase, and we're also seeing the average booking value per total transaction increase as well. There's a couple of reasons for that. So definitely seeing stronger performance out of Europe, which has some impact on the overall transaction size. So we're seeing some big transactions out of those markets. We're seeing that our product mix and the value that our customers are seeing through the platform is increasing. And with that strong demand that I mentioned before, we've actually been able to help our customers increase their daily rate a little bit over the last couple of years, but not see a lag in demand. So, and we still think there's a little bit of movement to go in that as well. So, for us overall, if we can grow that price per day, we can grow those days per transaction, and we can still have that strong demand, that's a great position to be in from a marketplace perspective. Let's give it a little bit of an indication of who our customers are from a hirer perspective. So, we've certainly seen that, this strong demand, as I mentioned before, for people that went away on a camping trip. Every 4 minutes we see a booking made on our platform. Every 24 hours we have customers going on these trips. I think one of the interesting things is the amount of customers that actually extended their trip via our platform. And what that actually speaks to more than anything is the fact that our platform doesn't really experience leakage. That's a key problem that other marketplace platforms have, where a customer will traditionally meet through the platform. They'll have that initial transaction, but then they'll actually look to have an offline transaction with that particular individual. We don't experience that because of the way that we've built the platform with our insurance products, our contracts, our management of the assistance while on rental, and the various different added value that we have through that platform. So what we actually see is that customers, if they do want an extra day, for example, everything goes back through our platform, and we don't experience that leakage, which is a great place to be. From a owner's perspective, we actually have we can see that we're growing those overall owners. We're certainly seeing that the average owner is different to what a lot of people expect when they talk about who is a traditional RV owner. So people often think that an RV owner is what we refer to in Australia as the grey nomad, the older retired couple who have a vehicle and then will rent it out through our platform. In actual case, it's the young millennials that are the people who own vehicles on our platform, and that's the fastest growing segment in the RV sector overall. So 25 to 40-year-olds who are looking to be able to buy that vehicle, as well as being able to still have the home ownership and all those things that go along with it. So they're able to leverage Camplify to help them pay for that vehicle, and then still be able to have access to all of these goods and services that they want in an overall experience. So it gives them the freedom to be able to choose when they use this vehicle and not just be tied to that as 100% of their holidays into the future. So, from a marketing perspective, I mentioned before that, growth is important to us, but what we've been able to achieve is this customer acquisition cost that is actually at a sustainable, manageable methodology. So, we're very strong in an organic perspective in terms of our growth. So we very much focus on that in every aspect that we do through the platform. But when we actually pay for customers, we do that in a sustainable way. So our average owner is costing us at the moment $176 to acquire, and our average hire at the moment just $9.50. So you can see from that earlier slide where our average transaction to us is $321, that from a customer perspective, as we're acquiring these owners, as soon as they're taking their first booking through us, we're in a net cash positive position. So that means that we can continue this growth journey, and that we can actually leverage the investment that we've made into the business, and we'll start to see that big scale over time as we get more and more people onto the platform. And we're not like, I guess, other traditional tech companies where we just spend and spend and spend with no control. We have this approach that is make sure we're growing effectively, but also we're really managing and maintaining that customer acquisition cost, which is creates a good business overall. And it's something that I think a lot of tech companies forget about. They just really focus 100% of their efforts on growth and nothing else. So just to give you a little bit of background into the industry. So I'll talk mainly about Australia, because Australia represents at the moment 90% of our market, but we're certainly seeing that growth in UK markets in particular, and European markets significantly, so that Australia is actually becoming less of our primary market, but still at the moment represents 90%. So in Australia we have a couple of traditional rental companies. So the main ones being Apollo, who's listed as ATL, and Tourism Holdings. So they operate under a bunch of different brands, and they're also listed in New Zealand as THL. So what we find with those traditional rental companies is that they really focus on the international inbound tourist. So we've seen that over time, their product has evolved to service that market. And what they've actually done is they've left on the table this domestic customer. And the domestic customer for us is really the focus, and it has been since day one. In a pre-COVID environment, we were seeing sort of upwards of sort of 96% of our customers were domestic. And certainly, the last couple of years, we've obviously been, almost 100% domestic. So what we've found in this market is that those traditional operators, particularly in the last couple of years, have actually dramatically decreased their fleet due to COVID. So they haven't had those customers to service the inbound market, and they haven't actually been able to pivot their business to service that domestic customer. So they've dramatically decreased their fleet by around about half to be able to actually sell those vehicles on and continue to get revenue into the business. And so what we're seeing now is that as we evolve, not only are we really servicing and still seeing that strong demand from the domestic market, but we're seeing the demand and the opportunity in the international inbound market as well. We're now significantly bigger than all these operators combined. So we're able to actually provide a great product for both sides of the market through our platform. If we look at the Australian market from a direct competitor, peer-to-peer, we see that our main competitors in Australia are Camp2, who has around about just over 100 listings, so significantly lower than us in terms of our market space, and Camper, who we've actually just acquired. So there's not really that many competitors in our market. In New Zealand, our main competitors were Camper and MyWay. We've actually just acquired both of those guys. So certainly the biggest operator in the New Zealand market. And I will actually touch directly on the New Zealand market in a minute to talk to you about that market. In the UK, we see Yescapper and GoBooney. And in Europe, generally, we see sort of Yescapper and Paul Camper as a couple of competitors in those markets. But we certainly have this great momentum, and we also know that we're growing a lot faster than all of our competitors in those markets. So I mentioned before, those advantages that we have in terms of us versus those traditional rental companies. I think a couple of other things to touch on there is that our acquisition cost, as I mentioned before, for how we're acquiring those customers, it means that we're growing month on month by sort of 400 to 500 vehicles, whereas we're seeing that decline from our competitors of those traditional rental fleets. So it means that we have this exponential growth and have this trajectory of being able to actually be in a great position to serve those customers as we continue to grow significantly. Overall, the Australian market, what we see is that there's actually now over 800,000 vehicles in market, and it's been growing by over 10% over the last couple of years every year. We have less than 1% still of that total market. So we have a huge amount of growth to do in every market that we're in, but particularly the Australian market, where we're very strong and we're seeing this really strong growth. We still have a lot more vehicles to put on our platform. And just based on that demographic of the type of customers that come onto our platform and the way that we've been able to look at who that will be through our platform, we certainly think that we can get upwards of 50,000 vehicles in the Australian market over the next few years onto the platform. So there's a massive amount of growth, but also a huge opportunity for us to be able to service that market. I think travel general has seen some impacts on the last couple of years due to COVID. Certainly in the Australian market in 2021 in particular, we saw that a huge amount of restrictions in the market due to COVID implications and not being able to travel at all. What that's meant is that we have this customer who really has a strong desire to travel and has intentions to travel, particularly in the next 12 months. And we're not seeing that the amount of customers who want to travel outside of Australia is dramatically increasing. We're seeing this intention of customers to be able to travel domestically in the next couple of months and years in particular. In the UK, we're seeing a very similar trend where we have lots of customers who actually want to travel inside the UK, and that's been due to COVID, but also the pressures of Brexit and geopolitical environments, and you name it, into that market. So we're seeing really strong indications that it's going to be a great next 12 months in particular for us in the UK market. So our technology platform is something that is unique to us. It's a custom built platform. It's all developed in-house through our development team in Australia. And it really provides a great competitive advantage to us. It is custom built with particularly the owner of the vehicle in mind. And so we've built this end-to-end system that enables our customers to be able to really effectively transact. And we sort of thought about the way that we do that sort of every step of the way. We've focused on verification of customers to build those trust elements. We've really tailored the customer to being able to manage those bookings and really provide a great pre and post hire process for both of our customers through the platform. So we're really strong in Australia with that product, but we've been able to actually scale that product to the other markets, including building it out in Spanish was a big milestone for us, and we've been able to create this multilingual approach, which means that we're able to actually now scale that to other markets in the future as well. And we've been able to build this all in-house with things like SEO built into the platform, which is fantastic from our perspective. So new for 2022, here's some technology things that we're working on and just have released recently. So most notably, I'm going to touch on our Hire app. So our Hire app, we've just released it only about 3 weeks ago. And we've already seen over 5,000 downloads, one of the fastest growing apps in the App Store in Australia. And that app's been designed to help provide better customer experience for our hirer, but also to be able to help us with user conversion and returning customers. Automated pricing, so we're working on a way that our owners can make sure that they have the right pricing levels set for them for peak periods and also for the demand that we see through the platform, so we can help them get the maximum yield for their vehicle. Also, Instant Book we have, which is just about to be released to our customers at the moment, to allow them to one-click book through the platform. So they're all some major things that we've been working on that are about to be released or are being released at the moment. So from our growth perspective, we're certainly looking at how we get more vehicles on the platform, but also how do we increase our revenue? So how do we add more products to the platform? How do we look at that platform mix as well? And how do we look at pricing perspective, etc., different types of levers that we can pull to increase things. So we've launched a number of new products recently. One of those has been our vehicle ordering system. So what we've been able to do is look at our customers who are growing and adding more and more vehicle to their fleet, and we've been able to connect them up with manufacturers who want to supply those customers and create Camplify versions of those vehicles and connect up those customers together. So we're actually taking a percentage of those vehicle sales that customers are making through our platform, but it also means that as a traditional vehicle seller, we have no premise, we hold no stock, we have no finance issues. It's just on-demand ordering from our customers' perspective. So it's a great additional product that we can feed in that also provides more and more vehicles onto the platform for our customers. So New Zealand, I just want to touch on that in particular. So we've just announced that we've acquired MyWay and ShareCamp from CHL in the New Zealand market and also in Australia. So they're two platform operators that have been sort of dominating the New Zealand market for a number of years. That will complete this month, so in April. Just a little understanding about what the New Zealand market sort of represents. So in a pre-COVID environment, Apollo and THL together had a combined over 125 million bookings in FY 2019. They've dramatically sold down their fleet, as I mentioned. And what we've seen is that over sort of 39% of tourists into that New Zealand market come from Australia. So from our perspective, we're about how do we service those customers, in particular the Australians who want to go to that market, while there's not enough fleet anymore for them to do that. And it's a significant size market. And we think it's a very similar size market to the Australian market, and that we can have a really significant position in that market now, and that we're actually probably one of the biggest rental operators now in that market through these acquisitions, and also with the sell down we've seen in fleet. So from our perspective, really, really good opportunity in New Zealand, and we're really excited about what that means for us. Certainly the data is showing that a lot of Australians want to go to New Zealand in the next little while, and we're already seeing bookings coming through now, and that Australians have only been able to go to New Zealand for a couple of weeks. Those borders have just opened, and the rest of the world from next month. So really, really good opportunity, and we're expecting to see some dramatic upswings in that New Zealand market. And with this additional fleet, and there's businesses that were acquired, we're in a great position to be able to service them. So in summary, from my perspective, we are a really aggressive growth company, but we're doing it in a very, very low burn perspective. We're actually in a positive cash flow environment. We've got great cash reserves. We have no debt. We have a huge market opportunity in every market that we're in. We're still less than 1% of the total RVs on platform, but we've got those great metrics. We've got sustained customer acquisition costs. We've got significant growth over time. We've got high booking values, and we've got that great cut of revenue that we actually achieve through the platform. So we're a founder-led business. I founded the company. I've been in the business since day one. We've been able to add additional significant experienced people into the business to be able to really help me to grow this business and take it to the next level. We've got a team in Europe with a base in Lisbon that we've set up to be able to service that market. So, from our perspective, we're in a really great position, and we really want to focus on how we really take this business to the next level. Thank you very much for your time, and please feel free to reach out to me via LinkedIn or via our investor website if you have any questions, and I'd love to have a conversation. So thank you all, and I look forward to seeing you in person at the next conference.